Joining us now from Geneva is WTO Chief Economist Bob Koopman. Bob, thanks for joining. How do you then take
Hi,
into
Alex.
account things like the slow rollout of vaccines in Europe, potential more lockdowns in Europe, Brazil still a real mess? How does that factor in to your outlook?
Well, it is factored into our outlook. Trade is largely driven by GDP growth, and our GDP estimates incorporate different scenarios for vaccine rollout, either faster than expected. You'll see we have an upside scenario that would add another percentage point to our baseline scenario, which is 8% for 2020. So 2021, so it would go to 9% if things went out smoothly. It would drop another 1% if things go badly and the variants have a bigger impact on the global economy than we expect.
Bob, how much of the kind of the positive surprises that you're getting at the moment are driven by what is happening in the United States?
Well, a fairly big, sizable amount because of the large stimulus and aggressive monetary and fiscal policy we've seen in the United States. It's really helped with the global recovery. But many countries around the world have also taken aggressive fiscal and monetary responses, which compared to the great financial crisis, that's really helped mitigate the downside impacts of the pandemic.
And part of that is going to be, of course, all these stimulus checks that were cut to people in the U.S. And you can just imagine how much more money is going to be flowing in because of the infrastructure plan. So I'm wondering, as you look at world trade, what stuff is going to be moving where?
Yeah, so what we've observed this past year, which was a surprise to us, the composition of the pandemic health-related effects hit proximity-related services much more than the overall economy. And consumers that had money shifted to buying merchandise, goods, things that they could get delivered from their local, office supply store, and invested in redoing their homes or their flats. So we've seen a lot of that spillover, money not being spent in the service-related part of the economy into the manufacturing part of the economy, which is pretty highly traded. So, and I would expect to see some of that continue into the coming year. Although, if we can reverse some of the health restrictions, you'll start to see some of that froth taken off as people shift their consumption back to proximity-related services, do more travel, go out to eat, go to shows.
I'm curious, you are the chief economist of the WTO. We've just seen a major trade issue in the form of the blockage of the Suez Canal. Can you just give me a sense of the economic impact that you foresee as a result of that? Is it a one-off? Are we done with that now? Or do you think there'll be some more lasting consequences?
I think, Guy, the important thing to realize is that supply chains are subject to shocks every day, whether they're domestic or international. And the Suez Canal is a big potential choke point, but on a normal day, it's a facilitator of trade. It cuts a lot of time off the movement of goods from Asia to Europe and the United States. So I think I don't expect to see big knock-on effects. It was about, some estimate, around $9 billion a day. About 20% of global trade on a daily basis goes through the Suez Canal. Largely, it was delayed. I don't think many goods were ruined. So I think the overall impacts are pretty small overall.
So Bob, that echoes
for the firms that are adversely affected, they're not going to be happy.
So Bob, that echoes what a lot of experts have said. For me, though, when I look at what happened with the Suez Canal, what's happening in the LA port, which we've known that there's congestion, but there's like massive congestion now.
Yeah.
Biden clearly wants to onshore things like semi-production here in the U.S. And I'm wondering how you see the onshoring debate developing or inventory stocking developing.
So I would expect more inventory stocking for sure, as firms get this risk versus efficiency trade-off a bit right. Between the trade conflicts of the past few years and this pandemic, I think it's making them a bit more aware that they have to have more diverse sources of supply and perhaps bigger inventories to deal with any disruptions. But in the data, Alex, we don't see a lot of onshoring. And people have talked about re-onshoring for a number of years, and you look in the data and you don't see it. You do see more trade diversification, and you may see more nearshoring in geographic concentration of trade. And some will indeed come back onshore, but at the same time, other things will move off onshore. On net, the trend does not show a lot of re-onshoring. Biden's policies might change that. We'll have to wait and see. Most of those policies seem to be about, improving infrastructure and reducing the cost of doing business, which is a supply side impact, which could have positive effects on U.S. production and trade.